Welcome to this Bitcoin tutorial, where we'll be discussing everything you need to know about this revolutionary digital currency. Bitcoin is a decentralized digital currency that allows for secure, peer-to-peer transactions without the need for a central authority. Created in 2009 by an anonymous individual or group under the pseudonym Satoshi Nakamoto, Bitcoin has grown into a popular alternative to traditional fiat currencies. Bitcoin is a decentralized digital currency that operates on a peer-to-peer network called the blockchain. Each block in the blockchain contains a record of several Bitcoin transactions, and once a block is added to the blockchain, it cannot be altered or deleted. This ensures the security and immutability of the Bitcoin network. Bitcoin transactions are verified by network participants called nodes, who compete to solve complex mathematical problems to verify transactions and add them to the blockchain. This process is called mining, and the nodes that successfully add a block to the blockchain are rewarded with newly created Bitcoins as well as transaction fees. To use Bitcoin, you'll need to create a digital wallet. There are many different wallets available, including hardware wallets, mobile wallets, and desktop wallets. Once you have a wallet, you can purchase Bitcoin from a cryptocurrency exchange or from an individual who already owns Bitcoin. Bitcoin can also be earned through a process called mining, which involves solving complex mathematical equations to verify transactions and add them to the blockchain. When you create a Bitcoin wallet, you'll receive a public key and a private key. Your public key is like your email address, it's what you share with others to receive Bitcoin. Your private key is like your password, it's what you use to access and send Bitcoin from your wallet. It's important to keep your private key secure, as anyone who has access to it can spend your Bitcoin. Bitcoin wallets come in many different forms, including hardware wallets, mobile wallets, and desktop wallets. Hardware wallets are physical devices that store your private key and can be connected to your computer or mobile device when you want to send or receive Bitcoin. Mobile wallets are apps that can be downloaded to your smartphone or tablet, while desktop wallets are software programs that can be installed on your computer. To buy Bitcoin, you'll need to use a cryptocurrency exchange. There are many different exchanges available, each with their own fees, features, and security measures. Some popular exchanges include Coinbase, Binance, and Kraken. You can buy Bitcoin using fiat currency like US dollars or euros, or you can exchange other cryptocurrencies for Bitcoin. When you send Bitcoin to someone else, you'll need to provide the recipient's Bitcoin address. This is a unique string of characters that identifies the recipient's wallet on the blockchain. You can also include a memo with the transaction to provide additional information to the recipient. One of the key benefits of Bitcoin is its low transaction fees. Because Bitcoin transactions don't involve intermediaries like banks, there are no fees associated with these transactions. However, there may be fees associated with buying or selling Bitcoin on an exchange, as well as fees associated with using certain wallets or mining Bitcoin. Bitcoin is also known for its volatility. Like other cryptocurrencies, Bitcoin is subject to significant price fluctuations. This means that the value of your Bitcoin holdings can increase or decrease rapidly. While this volatility can make Bitcoin an attractive investment opportunity, it also means that Bitcoin is not a stable store of value like traditional fiat currencies. Despite its volatility, Bitcoin has many potential use cases. For example, Bitcoin can be used for international money transfers, as it eliminates the need for intermediaries like banks and can be sent across borders quickly and easily. Bitcoin can also be used for micropayments, which are transactions that involve small amounts of money. Because Bitcoin has low transaction fees, it's ideal for these types of transactions. Another potential use case for Bitcoin is as a store of value. Because Bitcoin is decentralized and has a limited supply, only 21 million Bitcoins will ever be created. Some people believe that it could serve as a hedge against inflation and a stable store of value over the long term. In addition to Bitcoin, there are many other cryptocurrencies available, each with their own unique features and benefits. Some popular cryptocurrencies include Ethereum, Litecoin, and Ripple. While Bitcoin remains the most well-known cryptocurrency, these other cryptocurrencies have their own communities and use cases. It's important to remember that Bitcoin is still a relatively new and rapidly evolving technology. While it has the potential to disrupt traditional finance and change the way we think about money, it's important to approach Bitcoin and other cryptocurrencies with caution. It's important to educate yourself on the risks and benefits of using these technologies and to invest only what you can afford to lose. One potential drawback of Bitcoin is its scalability. The Bitcoin network can currently process only a limited number of transactions per second, which can result in long confirmation times and high transaction fees during periods of high network usage. However, there are ongoing efforts to improve the scalability of the Bitcoin network, including the implementation of the Lightning Network, a Layer 2 scaling solution that allows for near-instant transactions with low fees. In addition to its potential use cases as a currency and store of value, Bitcoin has also sparked innovation in other areas. For example, the concept of smart contracts, self-executing contracts with the terms of the agreement written into code, was first introduced in the Bitcoin white paper. Smart contracts are now a key feature of other blockchain platforms like Ethereum. Finally, it's worth noting that Bitcoin and other cryptocurrencies exist in a legal gray area in many jurisdictions. While some countries have embraced cryptocurrencies and established regulatory frameworks to govern their use, others have banned or restricted their use. It's important to research the legal status of cryptocurrencies in your jurisdiction and to comply with any applicable laws and regulations. In conclusion, Bitcoin is a fascinating and rapidly evolving technology with many potential use cases. While it's still a relatively new and experimental technology, it has the potential to disrupt traditional finance and change the way we think about money. Whether you're interested in using Bitcoin as a currency, a store of value, or simply as a tool for innovation and experimentation, it's important to educate yourself on the risks and benefits of using cryptocurrencies and to approach them with caution.